Well, run us through what you're making of trade at the markets at the moment, where we saw the bourse yesterday not being able to hold on to its new 2010 closing high, which was hit on Friday.
Basically, I believe particular factors have actually come into play, especially with 16 days to go before we actually vote for the issue of the referendum. And at the end of the day, I also believe that the issues of foreign investors actually pulling out of the market because of what's happening on the Eurozone level, and then also them actually cashing on the capital gains as they change strategy on how to look at the new portfolios. I also believe for a while the market has been growing and having a rally on fundamental factors, but now what's coming into play are technical issues. We're looking at factors that actually define critically the growth of a company, be it in terms of profit, be it in terms of the share appreciation of the market. So when you look at the current affairs and then the technical aspects, we're seeing that the market will actually be undergoing a slight correction, especially on key counters that have been able to see its growth in the last couple of weeks.
With that in mind, we've seen just two figures emerge when it comes to Equity Bank's results, which are being anticipated to be released later today. We've seen that first half profit before tax is up 46%. What do you make of those numbers, and is it in line with what you were anticipating?
I believe equities is a trailblazer in every aspect of, 46% pre-tax profit is really huge, and I can only imagine the other aspects of growth to, at the bottom line of the balance sheet at the end of the day when all the results actually come out. But what I know is that the strategic partnership between Equity and Safaricom, the M-Kesha account, has been able to give it immense access to a lot of clients who've been able to boost its client base, its deposit base, it's basically interest base, and at the end of the day, with over 8 million new clients on board, and most of them are looking for new loans, we're seeing that this is a strategy that has actually increased its value and reduced its cost in terms of operations, because most of what these financial institutions are actually doing is looking at processes that they can apply to do business that are less reduce their costs and increase their value. So the numbers are actually pretty impressive, and I expect we should be seeing even more impressive numbers from Equity.
Let's take a look at the bank's net loans, because that jumped 27%, and some could say coming as a bit of a surprise, where we thought credit lines were tightening quite a bit, especially given the fact that banks have been pretty resistant to lowering their interest rates. What do you make of that number, 27% jump in net loans over the first half period?
That's an impressive number, because one, we need to look at the strategy for Equity and then the strategy for other banks. We see that our Equity Bank has it's looking at the bottom of the pyramid kind of client, the ordinary people who actually when you're looking at the ordinary person in the small and medium enterprise sector, people who want access to credit facilities and are willing to pay it back on time. And the fact that most of these people can access this money via their mobile phones, it's one of the issues that's been able to see Equity actually give them more money, because one, in terms of sustaining, in terms of costs, it's actually low because of the partnership with Safaricom. But at the end of the day, these are people who are willing to pay back instantly because they know they need the credit line open so that they can be able to survive. So this is where Equity Bank is different from other banks, because we realize that other banks have been, they've increased the terms and conditions of accessing the credit facilities. But with Equity Bank, it's looking at the mass market, and it's looking at how it can be able to jumpstart the small and medium enterprise sector for wealth creation. So
at 23 shillings 75, would you be a buyer?
Definitely, and I believe we're seeing the equity price at the market. Actually, it's going to be now influenced by three factors: the current affairs, the fundamentals, and the technical aspect of it. In every aspect, all the economic indicators for the share price are very positive.
Well, where we've got many of the banks seeing this positive momentum, on the back of expectations out of its first half results. We had KCB yesterday easing back just over 1%. It closed at 17 shillings 75. It trades at a trailing PE of 18.6. And yes, of course, we've got to factor in the rights issue dilution that's just occurred. But what are you making of the price pullback that we've seen here? Because some are suggesting that it's been steeply overdone.
I believe the stock price for KCB at the market is a bit high because one, I expected it to be a bit lower with the rights issue in mind, and especially given that this is not the first rights issue they're actually issuing, and actually a couple of other issues and factors that have not been addressed, especially why such a, 15 billion in terms of a rights issue. The expansion strategy was going very well, and we'd expect that after like 2 years of doing regional expansion, you'll expect the bank to actually start having returns on the investment. But the fact they need more money to expand, raises a red flag in particular sectors, especially on the loan portfolio. That's one, and also two, on the aspect of the operational loans. But what I believe is it has strong fundamentals, both in terms of technical analysis and current affairs, and listening to what the CEO has been talking about the bank in the last couple of days, promoting the rights issue and talking about how the bank has been able to grow its business sevenfold, especially in the region. We're looking at the bank taking a lead in terms of assets in the region because it's the only bank that has actually an extensive branch network. So if the rights issue is handled well, and if the current factors at the stock market continue playing out the way they are, and without really factoring in the political cloud, I believe the bank should be on the way to steady growth.